If you're looking for any good idea with a time horizon of less than 2 or 3 years, even 4 years, you're just a trader. And right. You know, I think, you know, there's something wrong. There's a moral hazard to making 99% of the population traders, right? The real moral hazard of the government monetary policy is by pegging the interest rates to zero, and by yield curve control, they've demonetized the currency, or they've eliminated the currency as a store of value for savers. And that means they've forced retirees, it doesn't matter retirees, it doesn't matter whether you're 20, 30, 40, 50, 60, or 70. They were forced non-financial investment professionals to take risk, forced them to take risk. And then the cruel joke of it all is, in addition to destroying your savings account and destroying sovereign debt as a store of value.
What would you do if you were the CEO of the publicly traded firm with the largest exposure to Bitcoin and you just saw roughly $5 billion of your notional revenues disappear? If you're MicroStrategy's Saylor, you just sit there and keep spreading the word about cryptocurrency. In today's video, Bitcoin evangelist and CEO of MicroStrategy Saylor updates about the macroeconomic outlook surrounding Bitcoin and other cryptocurrencies.
I give thoughts in three categories: Bitcoin, the macro economy, and then the crypto or micro economy of crypto. And so if I start with Bitcoin, the first observation is, I'm not a trader. I think that you need to be a professional proprietary trader to have a short time horizon. So I don't really think anybody should buy it unless you have a 4-year time frame. And I'm hoping that you want to own it forever. I think that Bitcoin is one of those forever assets, like the family farm, or like a trophy. You know, if you bought like the New England Patriots or a soccer team, you know, you want to give it to your heirs. So I have a lot of opinions about the long term, 4 years to 10 years out. I don't have any particular useful advice over the next 4 weeks, you know, and I'm not a technical person. So, and I hear all sorts of things, so we can talk about it, but that's just what I hear in the market. You wouldn't beat it with gold. You wouldn't beat it with NASDAQ stocks. You wouldn't beat it with the S&P index. And so, you know, you could roll the clock forward. You can roll it to August 10th, 2020. That's the date that my company bought $250 million worth of Bitcoin. So people knew who I was on that date, and we made a macroeconomic commitment. Now, we've been studying it for 90 days previous, and so we made a commitment based upon the circumstances in the second quarter. But if you look at the macro numbers from August 10th, if we had bet 250 million on Bitcoin, 250 million on gold, it would have been down 10%. Gold is down 10% since August 10th, 2010. So gold got a boost in the first part of the crisis, but then it kind of flagged. NASDAQ is like flat, -1%, 0%, went nowhere for the entire 18 months. The S&P slightly up 11%. Single family homes up 26%. The money supply up about 20%, maybe 25%, depending on how you count it. So again, single family homes tracking the money supply. Bitcoin, even as it's been thrashed right and left, up 86%. If you assume that the market still controls the long end of the yield curve, right, then the fact that 2-year money is more expensive than 30-year money suggests that the market expects a recession, and they also expect that they're never going to get to that target interest rate. They're going to lower the interest rates. If your time horizon is 10 years, then you can take a deep breath and you can ask yourself the question, when the sound and fury passes, you know, and when we move on to the other side, what do you want to own? And we're back to the observation. You probably want to own digital monopolies, like companies that have more power than governments. Now, so there are certain things you want to own through turbulent times. monopolies, right? I mean, it turns out, right, that John D. Rockefeller went into the Great Depression, and all those oil companies came out the other end of the Great Depression, and they're still pretty powerful companies 100 years later, right? If you have an energy monopoly or the like. So I think if you're owning digital monopolies that provide the basic elements of the 21st century, and they're companies, they're kind of transnationals, right? They will find a way to raise their prices, and or at the end of the day.
So, do you agree with Michael Saylor that digital monopolies always find a way to increase their prices? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video, and thanks so much for watching.